All right, good morning, everyone. Let me get going here. Okay. U.S. stocks had a bit of a sideways, choppy session yesterday. I think again on reasonably light volume. We continue to see the markets grinding higher a little bit. We broke out through I think trendline resistance on the S&P as of yesterday. We'll show that chart in a little bit. You can see most sectors up on the day again. I think tech was a little bit of a laggard, but for the most part, that was on the back of Intel. That was down 3.6% on a broker downgrade. But I think it's the fact that markets are kind of holding on strong going into earnings season with such a dismal outlook for earnings season, I think is really, really important. We're continuing to see this sort of multiple expansion going on U.S. markets and a return to normality. So it's just really important that we take cognizance of that, and we continue to recognize that markets are healing and are returning back to the normal sort of situation that we're used to. All right, Asian stocks, pretty good session pretty much across the board. I think most every market was up on the day. The Nikkei was up over 2.5%. Still a little bit of weakness out the yen. Emerging market currencies started to tighten up a little bit. And then we also had Alcoa that had better than expected numbers yesterday afternoon to kind of kick off earnings season in the U.S. We had some inflation numbers out of China. We had Chinese consumer prices, and we had producer prices. And what we saw was that consumer prices climbed 2.7% year over year. Expectations were for 2.5%, so that number came in a little bit hot. But the producer prices number was down 2.7% versus an expectation of a fall of 2.6%. So I actually think that they're looking at it, even though the consumer pricing number was a little bit hot. I think they're looking at this because the producer prices number is looking so soft that the government may come in and do a little something to give some stimulus to the economy there, maybe through a rate cut or something along those lines. And that's really, I think, what's gotten gold going this morning, up about over 2%. On the Asian session. So we really haven't seen gold make such a strong move in the Asian session in a while. But we did see commodities up across the board yesterday and overnight. So we'll have to continue to watch that one. All right, we had, like I said, Alcoa was out earlier. They beat by out last night. They beat by 1 cent. I think they were up about 1.5% after hours. Nothing too significant, but a decent little start to earnings season for the U.S. Then we have Amplats workers that have returned to operations today. Amplats confirmed that all operations are running normally. So that's probably a small positive for them. And then we've also got SAB Miller, which was cut to underperform versus sector perform at RBC. All right, market data out today, like you said. We had the Chinese PPI and CPI numbers we've already talked about. We also had M3 money stock out of Japan, which is slightly higher than expected. That's good for I think for their weekend there. And then and we also have industrial production and manufacturing production out the UK at 10:30. And that's it. It's a very light day for data going forward today. All right, let's jump into the maps. Okay, first thing I wanted to show is the S&P. On the S&P, I just wanted same sort of chart we looked at yesterday. We just showed the trendline resistance when we were basically at the close of Friday. We were right at trendline resistance there. Nice little flag pattern. We've obviously pushed up to the upside, broken through trend line to the upside here. You can see markets this morning also feel really strong again. Yesterday markets were kind of unnaturally strong, for a better part of the day. I think kind of being led by this. We're literally only from closing highs, we're only 20 odd points away from closing highs, and from all-time highs I think we're about maybe 35-40 points away from all-time highs on the S&P. So percentage-wise we're getting right back up there again, which is a hell of a lot better than a lot of the other markets. A lot of the other markets are really lagging quite badly. So I think markets are trying to play catch up a little bit to the U.S., which has found some support and a nice push higher quite quickly. Okay, this is SAB, SA Breweries, which we've talked about this level 15 times over the past 2 months, and how important it is. Kind of 493 to 494 level, somewhere in there. We managed to regain that yesterday on a closing basis, and I think we should have a nice little move up to kind of trendline resistance on this flag pattern. Pattern actually looks a hell of a lot like a S&P pattern. Maybe we stayed a little bit below resistance for longer here, but I think 505, 506 somewhere up there is where we're going to get to, at least on trendline resistance on this flag. And like we said with the S&P pattern, we push higher. This thing will have a significantly higher target here in breweries. So, but I think the fact that we close above 94 is very significant. If we can hold that this morning, we'll see some more upside there, even though I got a downgrade. All right, let's look at mutual. I'll show mutual local and offshore. I'll just show here locally. We've got a bit of a head and shoulder pattern. No, this is a little bit longer term. We're talking about the last 5-6 months. I think if it goes any higher, today, tomorrow, you can really, count this pattern out, and we'll see it continue to move higher. I just wanted to point that out. But interestingly enough, on the quite short term, obviously the changes are due to the rand. You can see we've got a little inverse head and shoulder going here on the London pattern, and this is actually a beautiful inverse head and shoulder pattern. So I think my money's probably that this stock's gonna make a little bit of a breakout from these sort of levels here. And we'll see it, this pattern be the winning pattern, and could see this thing trade all the way back up to its highs over the next month or so. So watch mutual today. I think if like I said, if we can get any higher than yesterday's close and kind of hold there for a little bit, then I think it's worth buying. All right, Fashini also a bit of an inverse head and shoulder pattern potentially setting up here. We did close a touch below 95, which was where the other shoulder was, but obviously, they don't always perfectly line up. But I really like the risk reward scenario and the setup and how defined the neckline is here at 103. So, like I said, I think if we see a little bit of a turn up here in Fashini, I think I'll have a quick move to 103. And if it gets above 103, then I think we could also have another, $7-8 quickly to the upside on Fashini. So potentially setting up for a nice move to the upside there if we can hold these levels in Fashini. All right. Pick and pay. I'm actually going to go all the way back from 2 year. I'll show you first. I'll show this first. You can see there that was the previous low close recently at 38.20. We managed to close at 37.93 yesterday. So pick and pay is kind of making a new closing low, going back almost 2 years. And what you can see here, from the breakdown of the pattern here, and sort of this little consolidation. We'll take, call it, $2.50 to the downside as our target, which really puts us nicely to test 2 year lows, which are down here around 35.75. Or 35.70. So watch that one closely. I think this thing could fall another $2.5 over the next couple weeks. All right, let's have a look at Woolies. We'll go back into a 1 year. And Woolies also potentially has a little bit of a inverse head and shoulder pattern setting up here. But this one's definitely a little bit more rough. It's not as clearly defined as some of the other ones that we've looked at, but same sort of thing generally. And what I would look for is really a break above 69 to kind of confirm that inverse head and shoulder pattern, and break above 69 could potentially take us all the way back to the highs of the year and all-time highs in in Woolies. Like I said, this one's not quite as clean, but same sort of setup there, and I think that's your risk. I might even look for a trade above 68 or 10, wherever the recent closing highs would be, to kind of jump on board a trade like that. All right, and that's it for the local stuff. Last one I'll show in London is Tullow Oil. And how we kind of coming up right to test this 1080 level. Really been in a sideways consolidation pattern for quite some time, going back about 3 months. I think if we get above 1080, we'll take this thing from the kind of mid-range on the pattern. We'll be looking for about a pound of upside here, about 10% on the upside, which could put us all the way up to about 1180 or so on Tullow Oil. And that's it for today, guys. Thanks a lot.